So we just opened up this contract, a Tesla call option. I probably had it open for about maybe 5 minutes now, letting it go back and forth. We waited for the price to come to us. This is how you trade stock options. So it's been less than 5 minutes. We're already up 50 bucks. I wanted to just make this video to teach y'all that you can make money when the market is going down. You can make money when the market is going up. If you don't know how to trade options, I have a course for that. That is actually my first course I made, one of my most fire courses. All my courses are fire, but this one is absolutely fire because it teaches you how to make money regardless of if the market is going up or down. Most people, they buy something and hope that the market is going up, and that's how they'll make money. But in this course, I'll teach you how to make money regardless. So even if the market is pulling back, you can still make money. If the market is pushing up, you can make money. So right now, we're up 70 bucks in about less than 6 minutes on this. Some people take profit at 5%. Some people take profit at 10%. Right now, we are at 12% on this one. So we could take profit and just constantly do this over time and build up our portfolios. Nobody ever went broke taking profit. You have to remember now right there, we were just up $80. I could have closed this out, secured almost 100 bucks right there in less than 10 minutes and waited the next day and do it again. Or, some people like to try to make $300 a day to, secure around $275 a day to hit that six-figure mark trading per year. But, I just wanted to make this video to show y'all what is possible in a short period of time. Now, you see we're back over 13.9% at about $81. Just pulled back a little bit to $78, but this is what happens. The market is highly volatile. You can be up 1 minute, you can be down the next minute, but learning this strategy, you'll know how to make money both ways. So reach out to me, DecemberDeMarco@gmail.com, if you're interested in learning how to trade stock options. So we'll let this even play out for a little bit, just because I want to give y'all a real look at what it looks like when it pulls back. So you notice we were just up all the way to $80 and now we're down to 25. That's how volatile it is. That's why, you want to take profits when you're up. Now, sometimes, you can close those positions out, but I wanted to really leave this open to show y'all the volatility of the market. Notice we were just up $81 a few seconds ago, and now we're only up $5. That's why I try to tell y'all, nobody ever went broke taking profit. Now, this won't bother me because this is more for demonstration purposes, but I just want to show y'all how volatile it is, how much it can move within, minutes. So you notice we're down $10. We were just up 80 bucks, y'all. This is what happens with the market. Now we're down 20 bucks. 22 bucks. Are you prepared to handle this? If you learn what you're doing, though, this will only be a small amount to you based off of where you entered your position. So we should hold our, positions. We have our stop loss set just in case, but not really worried. Just going to let the price bounce around here and let y'all see what it actually does. Now with a 10% loss, some people cut their losses. Now you got to think about that. If your contract goes down 5%, at what point will you cut your loss? Some people do it at 5%. Some people do it at 10%. Some people do it at a certain, price, at a specific price. They're looking at key support levels. You have to make that decision before you enter these trades. And that's what you'll learn how to do inside of this course. Now, what some people also do during this point, let's say you picked out a perfect entry and the price still happens to pull back beyond that, some people will open another contract at that point to grab that same contract at a discount price. Now notice, now we're down 82. The highest we were up was 81. Now the furthest we went down was 82. And that all happened within probably less than 10 minutes of y'all seeing this record. Now remember, this is the same, thing holds true when you're trading stock options. You never risk more than you're willing to lose. You can only lose the principal amount of the contract. So if you paid, as you can see, I paid $575 for this contract, and I'm okay with losing $575. Do I want to lose $575? No, of course not. But I'm just letting y'all know the reality of it. Now notice we were just down 82. Now we're at that $40 to $52 level. This is the volatility of the market. Now we're only down 30 bucks. Isn't that crazy? Look at now, only down $12. Isn't that crazy how the market tries to shake you around? And, I'm trying to show y'all also the composure to have, how to, not put your emotions into trading. Because this is day trading. This is a lot more risky. And this is also important to have, shows why it's important to have a stop loss set. Because now I could have just let the price go down to, oblivion and who knows where, but I wasn't worried because I already had my stop loss set. Now we're only down $5, and y'all just seen we were down $82. That's how quick things can turn around. And now we're back in the green, up $3. Now this is a second time around where the price will raise up and you'll get an opportunity to close out this contract in the profit. Now we're up $23. This is a chance. You almost got 5% on this contract. You got to be smart. Do you want to close it out, secure that 5%? Or do you want to be risky, let it continue to go, and it could possibly pull back on you even further? You just got to have that already in your mind before you enter this trade. Now we're back down $2. We were just up $23 a few seconds ago. Just was down $82 a few seconds before that. Now, inside of my course, you will learn how to do this on a daily basis. Basically each day of the week, you'll learn what to look for, what to watch for. Now remember, we had the chance to take profit on this contract already. When I'm being really, really wise, I'll take a 10%, just to lock those gains in to make sure we didn't lose on it. You rather take a little bit of profit than a little loss. down $2. Now we're up $5. Very volatile. I remember we were just up $23 before it went back to the negative. We were up almost 5%. You have to think, it's better to have a W than an L. More W's over time, you'll make more money than having, those riskier times where you take that L. When you up, take profit. Now we're up $3. Broke even to 0. Now the reason why that can happen is because we picked a good entry. If we picked a bad entry, we will be deep underwater right now. But because we picked a good entry, it's coming back around our entry point. So now we're down 12. That's why I told you. Now we're down 20. Almost down 3.5%, almost 3.8% now. So that's why I told you, when you're up, you want to think about taking profits. Even some profit is better than none. Now, if you want to learn how to do this on other stocks, to learn how to do this each and every day where you can, put some money on the table, in your pocket, then reach out to me via email, DecemberDeMarco@gmail.com. Ask me about my stock options trading course. I'll give you some information on it, get you set up so that way you can, take this course at your own pace and learn how to start day trading and making money trading options. See, we just went down -22. Now we're only down 5. Now we're down 7. What would you do in this situation? When you go back in profit, would you secure it? That's $10 right there. $5 now. So it gives you a lot of chances. Up $20 now. We were just down $80 a few minutes ago. You get chances, sometimes it won't be a lot of profit, but it'll be better than none. Now this is live trading, really letting y'all see, the behind the scenes of, this, what the prices look like. Some people, they'll only show the good trades, only let you see, the successful ones. But, I try to, be transparent, show y'all exactly, what I'm looking for, what I'm doing, so that way you can have the same success. Now, right now we're down 5% on the contract, down 20, or was $30. Now down 22. Which one sounds better, securing a $10 profit or losing $30? That's what you have to keep in mind when you're trading options. It's very volatile. I'd rather take a 10% gain than a 10% loss. Now, I could have just took this trade, let it play out, see where it ends up, and then, if it was successful, if it ends up successful, then calling it, showing it, letting this video out, showing it to y'all. But that's not what I'm going to do. I want to let y'all see the real deal so y'all can get a feel of how volatile this is and how all over the place the price will be or your return will be. You could be in the green 1 minute and in the red the next, or in the green 1 second and in the red the next. Look at that, in the red 1 second and the green the next. Would you rather have a $15 profit or a $15 loss? Okay, here we go. Starting to move. Up 33 bucks now. We're up 5%. Would you rather secure 5%? Up $45 now, 7.8%. Would you rather lock that in? Up 50 bucks, 8.7%. Would you rather lock that in or risk a loss? Up 58 bucks. We are now officially 10% on this contract, a 10% return. You know, think about how long this video has been playing, how volatile you've seen this be, how far we've seen it go to the red, how far we've seen it go to the green. This is a chance to secure profit. What will you do? Up 60 bucks, 10.4%. Now I have my take profit set at around, I'm looking to probably take profit around 787, around that 788 mark. Might, you know, depending on how it's looking, you know, could possibly close it out a little early, you know, could possibly let it ride a little bit just for, you know, the viewers like y'all. So let me know, drop a comment if you appreciate me actually doing this video, being transparent with it, showing y'all the real deal, you know, letting y'all see how far it can go down, how far it can go up. Let me know. Now look, we were up just almost 50 bucks. You know, would you lock it in now, or would you wait and see the price go back into the negative and then have to close it out if the price hits your stop loss? That's why, you know, nobody ever went broke taking profit. Even if it's an amount that you're not, you know, happy or satisfied with, it is better than taking a loss. That's what I want y'all to really understand. Up 58, back with 10% profits right now. Well, you close it out at 10% gain, you see that's about as much as it's giving us, really. When you see it keep flirting with that amount, which the percentage that it constantly gives you, that's your, you know, it might give you 2 or 3 chances at that percent to, you know, get out in the meantime, especially if you got your contract for a short period of time. That's something you want to take into consideration. Now you can make even more money by, instead of grabbing one of these contracts, you could have doubled up and been up twice this amount. So just say we are up $48 right now, we could technically, or 45, we could technically be up $90 if we had 2 of these same contracts. That's something y'all want to know as well. What would you do? Would you close it out? You see it starting to see some resistance. It's starting to, you know, have a little struggle and taking some of the gains off the table. Would you close it out? You know, I'm letting this ride for y'all, just so y'all can really see, you know, the true volatility behind these contracts and determine, do you have this amount of risk? Now, there are cheaper contracts. You don't have to get one this price. You can find one cheaper. We're up 63 bucks right now, 10.96% on this contract. What would you do? Would you close it out? You're over 10% gains. Shout out to everybody reaching out to the channel, man. Up 70 bucks right now. Now what do you do? What do you do? Do you take profit? Some profit is better than none. We were just down $80. Now we're up $70. Would you rather close it here, secure this $70 profit, or risk going back down to that $80 loss? Let me know. At what level do you take profit? You know, of course, I teach you this in the course, but, you know, I want y'all to be thinking about this as well as you're watching this. You can also add, you know, a time, restraint to your trading as well. You know, you can enter the trade and say, you know, I only want to stay in for a certain period of time. If I don't get this by this time, then, you know, I'll be satisfied with 10%. Right now we're at 75 bucks, up 13% right now. That's an extra $75. Some people, you know, that's a decent amount of money just for a quick trade. We've been here less than 30 minutes. So to make 75 bucks, and people don't make that an hour, you know, working. Now look, we're back down to $23 profit. Should you have took it when it was $70, $80 profit? You know, if you were looking at this and this was yours now, would you would have wished that you would have secured that profit up plus 70? That's why I'm showing y'all this. That's why I'm just letting it run so you can see and get an idea of what it looks like. And also what it feels like. Remember, never risk anything more than you're willing to lose, so that way you don't become an emotional trader. Now we're up 60 bucks, up 10%. We just shot to 100 bucks right now. Just hit 100 bucks on this contract, y'all. 118. Look at how that just happened. 118 bucks. What do? Do you close it out? Do you let it ride? 105 bucks right now. It hit my target of my take profit. Now I'm up 20% right now. Now I would normally be taking profit, but I'm gonna let it ride a little bit just for y'all. So I would have took profit right here for sure at this 130 range, because that's 20% on the contract, but we can let it go a little bit more. 125 right now. Up 20%. What would you do? Would you close it out and secure profit, or would you continue and, you know, to be risky and let it go? Up 125 right now. In a few minutes, now down 108. Should you have secured it when it was up 120? See, Tesla return on option up 20%. So the Robinhood is letting me know that we're up 20% on that contract. When Robinhood is letting you know you're up 20% on the contract, that's a good thing. That means it's a good sign. That means likely that's a good area to take profit. So I'm gonna see how it reacts against this resistance line right here. I want to see if it breaks this resistance at this. It's looking like it wants to break it. Up 143 bucks right now. Up almost 25% on this contract. So we're gonna let it ride a little bit. We're gonna let this candle close out and see where it ends. So we're up 160 bucks right there. This was 160, 148, 138, 135, Would you rather secure profit now or risk letting it go all the way back down? So now that it moved over 20%, you can say if it drops under 20%, I'll close out the contract. Up 130 bucks, not even 30 minutes yet. It's at 20% profit still, up 21% profit. So we'll close this out if it drops under that 20%. It's looking like it wants to break this resistance here. So we let that candle close. We're up $145, 25% on this contract, which is good. Up 24%, 140. Sometimes, you know, when you have a winner, you want to let the winners run and you want to cut the losers short early. So right now, we're going to give this one an opportunity to run. It hit our target profit already. It already hit that level. So it's already risky being in still. I'm showing y'all this. This is risky by staying in after it hits your target profit. Just dropped to 18%. What do? We close that contract out. So we just sold that contract. We bought it for $575, sold it for $680 for a total profit of 105 bucks right there. That's how you do that. So we just made 100 bucks in a few minutes. So if y'all are interested in learning how to trade stock options, reach out to me to get my stock options trading course, DecemberDeMarco@gmail.com.